Hi, I am Nicole Goldin. I'm the head of equitable development at UNU Center for Policy Research and a non-resident senior fellow with the Atlantic Council Geoeconomic Center. And we're live here at the Atlantic Council's IMF HQ2 studio at the World Bank IMF Spring Meetings. And I'm very happy to be joined in a conversation now with William Roos. He is the Assistant Secretary for Multilateral Development and Trade Affairs at the French Treasury. He's also the co-chair of the Paris Club and co-chair of the G20 International Financial Architecture Working Group. So thank you for joining me, William. We have a lot to discuss today. In her curtain raiser last week for the meetings, Kristalina noted how public debt is at its highest levels in recent years. And we know at least half of low-income countries are in or nearing high risk of debt distress. There is a need to refinance some $60 billion worth of external debt annually. And across these countries, much of the global south, we're seeing that interest and debt service payments are actually outpacing the amount of incoming aid, which is also now declining globally. And so that has really tightened the fiscal space of much of the lower and middle income countries, inhibiting their ability to invest in growth, in development, in climate resilience, and really causing a lot of challenges. We've just had the World Economic Outlook release, which also had significant downgrades in much of the world. So you are very well positioned to help us kind of unpack this. So let me start by asking you, what do you make of the current, debt landscape and, the WEO and the impact of the trade wars, of tariffs, of declining ODA on the debt landscape?
Thank you very much. It's a great pleasure for me to be with you and to have this opportunity to discuss about indeed a quite challenging global economic outlook and what could be the impact on the sovereign debt risks. First, regularly when we come to the spring meetings, to the annual meetings, we regularly ask the question to IMF and to World Bank, do you think that we have some countries facing debt distress but no global debt crisis, or do you think that we are in a global debt crisis? The answer has always been no global debt crisis, but clearly some countries with need to restructure their debt, plus, as you said, a liquidity issue many countries are facing. But there is a but in the answer of IMF and World Bank. They say we are not in a debt crisis mode if there is no global shock. And so this is a key question. Currently no global debt crisis, because indeed the number of countries in a high risk of debt distress or in debt distress, this number is significant, but it's lower than before you remember this HIPC initiative, High Indebted Poor Countries initiative, where we cancelled a big part of the debt. Clearly the debt levels are not as high as it was before the HIPC initiative. And also, we see that progressively we have helped some countries like Zambia, like Ghana. Currently, we are working on Ethiopia. And so progressively, these countries, they are moving from high risk or debt distress to a better rating. But clearly, first, there is this liquidity issue many countries are facing, and you mentioned some figure regarding the debt service. It has increased a lot, it's a fact. It's due to the fact that the level of debt has increased compared to just after the HIPC crisis, plus the interest rate has normalized, and for some countries they have had, with the COVID crisis, some of them lost the market access, and progressively some of them they can recover this market access, but sometimes with quite high interest rate. And you have also some variable interest rate in some countries, sometimes some depreciation of the local currency, etc. So it's a mix. And indeed, what we are doing now at the G20, if I look at the International Financial Architecture Working Group and what we at the G20 is it is both to be able to address, to implement a debt restructuring in an efficient manner. We have made progress, but we need to continue. We are not there yet in terms of clarity, timeliness, etc. And in parallel, we have to look at how to support countries whose debt is sustainable, but they face high debt service, and so they need to be helped for refinancing and sometimes for debt management reprofiling, friendly reprofiling. But as I said, the key question, and I'm sure that it will be one of the big topic of the big topics of this week, is are we in front of a global crisis, a global economic crisis? You mentioned the trade tensions, and clearly the US tariffs they have already a negative impact. We have seen the downward revision of IMF forecast. At this stage, the downward revision are mainly in the US and in China, because it's where we are. But clearly, emerging and developing economies could face also difficulties. Emerging countries, we know that they can suffer from a sudden stop in regarding capital flows. The assessment we have based on IMF analysis is that they have quite high buffers, and they have also improved the way they manage the macroeconomic volatility. But of course, if there is should we see a real difficulty in terms of capital flows, which is not the case today, it could be difficult for some emerging countries, and this is why we fully support the message of Kristalina Georgieva that it's very important, of course, to de-escalate and to reduce the tensions in the trade system, plus of course to avoid any tensions to go towards the capital market. And for developing economies, low-income countries, vulnerable economies, the key question is what could be the impact on the market access or capacity also to benefit from official development assistance. It's also another shock they face. We have seen the downward revision regarding US aid, US ODA in general. To be honest, we have also our own budget constraints in Europe, including in France. So we have had to reduce also a bit our ODA. And the key question is to improve, to optimize the use of concessional money. It is still quite significant. And I think it's also important to have in mind that the US have been very important in terms of humanitarian aid and also security, and Europe has been above the US in terms of ODA. So, of course, in the UK, in other countries, including France, we have to adjust, but we need to have more impact, and also to be sure that where we use the money, it is where it is really needed, and we need the feedback of developing countries for that, and we need also to combine public finance with mobilization of private finance.
That is a lot,
yeah.
Absolutely. And I want to pick up on several of your comments and kind of unpack them, a little bit. In your point about wanting to hear from more from the countries that are in need, and thinking through the variety of kind of proposals and what's happening. We've been hearing sort of different proposals for both, debt treatment, if you will, restructuring, as well as on the, I won't call it prevention, but on lowering the cost of capital to enable more fiscal space. We have a number of proposals in the financing for development outcome document that is, currently in process. We'll be in New York next week for the continuation of that process leading up to Civi this summer. And it includes, issues around, as you talked about, sort of restructuring, expanding who has access to some of those mechanisms, like for the middle income countries, thinking more about how to use debt swaps, thinking more about can we expand, pause clauses or other kinds of contingency clauses, thinking about transparency, and that's including your point about in the private sector. So, when you sort of look at what is on the table, we're expecting the Global Sovereign Debt Roundtable to issue their toolkit. So great anticipation around that. How do you see the landscape of some of the tools that are sort of currently available, how they, and where there may be a gap? There's proposals around a new international, mechanism. For restructuring in particular. So how are you seeing the landscape? Where do you see still the potential gaps, and where do you see the space to kind of move the ball, so to speak?
Indeed, we see that there are a lot of requests from low-income countries and some middle-income countries to have, I could say, sort of more ownership in the debt architecture. And I think that this call has to be heard. At the same time, I don't believe that we need to rebuild the debt architecture from scratch. And because the way we have built this architecture, I think it makes sense. What do you need for a good debt architecture? You need to have sort of a global financial safety net. Of course, when everything is okay, when you have access to finance at low cost, everything is okay. But when you start to have difficulties, you need to be able to have a place where you can have access to low cost financing. And it is in difficult times. And it is the role of IMF and World Bank to be a place where, when you have a balance of payment difficulties, or in case for the World Bank, when you have temporarily budget support difficulties, there is a way for you to have access to finance which is not too high. And we have IMF and World Bank to do that. So I think you see that it makes sense for the debt architecture to start with IMF and the World Bank in the center. Then, what do you need? When a country has a debt which becomes unsustainable, you need to have an independent body to assess the debt sustainability. And we have already this place to do this independent assessment. We have IMF and World Bank Debt Sustainability Framework. It is a tool which is discussed at the board of IMF, at the board of the World Bank. All countries are represented at the board. So we see that we have already a commonly agreed tool to assess what is when a debt is sustainable and when a debt is not sustainable. It's also a tool which gives the magnitude of the debt treatment when a debt treatment is needed. And what is also good in this architecture is we have synergies between this debt sustainability analysis and the capacity of a country to have access to IMF financing and World Bank financing, because they tell the country, if your debt is not sustainable, you need to have your official bilateral creditors to commit to provide a debt treatment which will contribute to put your debt below the targets I decide. And I decide not because I am IMF or World Bank, because it's an IMF World Bank policy approved at the board. So you see that we have all, as creditors, official bilateral creditors, commercial creditors, bondholders, etc. We have an architecture which, in a way, forces us to do the debt restructuring at the appropriate scale. Not too much, because if you do it's a repeated game. So if you do the debt treatment with a too large scale a lot of time, then the cost of capital will increase dramatically. So you need to be sure that there is a debt restructuring only when it is needed. So you see that the articulation between the debt restructuring and the process of an IMF program, IMF supported program, the staff level agreement, the approval at the board, the different reviews, at each step, you need the creditors to make progress in terms of their negotiation with the countries. So we have already an architecture which gives a tempo for the debt restructuring, and we need, for example, the country needs financing assurances provided by us, official bilateral creditors, in order to have the IMF program to be presented at the board. And it works because it is our own interest. If there is no IMF financing, no World Bank budget support, the country will remain in areas and we will not be paid at all. So we have an interest to provide these financing assurances because otherwise it will be worse for us. Then we need to have a place where the country can engage with all the official bilateral creditors at the same time. And we have created the common framework for debt treatment, approved at the G20, also by all the Paris Club members. And we are committed for low-income countries to work in a coordinated manner. So I co-chaired the creditor committee for Zambia, for Ghana. We are working for Ethiopia, and I co-chair with China. And we have all the G20 creditors and Paris Club creditors working together. It can be improved, so the critics are right. It takes too much time. And sometimes there is a lack of clarity regarding the different steps. We are making progress, and if you see, for example, the time we needed for Zambia to move from a staff level agreement to the first agreement on the main parameters of the debt treatment, it took us 20 months for Zambia. It took us 13 months for Ghana and 8 months for Ethiopia. So it's still too long, but we are making progress. In terms of clarity, we are working on a document which could present the different steps a country has to follow. There is also a discussion within the Global Sovereign Debt Roundtable also to improve clarity. So, last element of the debt architecture, you need the private creditors, bondholders, also to be incentivized to provide a debt treatment at least as favorable. And for that, we have put in place a comparability of treatment principle in our agreements between official bilateral creditors and the debtor countries. And it means that a country is committed to remain in areas towards the bondholders and commercial creditors until they achieve a negotiation with a debt restructuring at least as favorable as the one we provided. And so it works because the country is really committed to do it. Otherwise, the country could lose the access to the IMF financing, World Bank financing. So you see that this architecture, of course, can be improved, but I am convinced that a new architecture would not make sense. But it's true that we need to provide more clarity. We need also to engage more with the UN system. We have heard this call. I've come to New York 2 times last year to engage specifically ahead of the FFD4 conference, and we need to learn and I think it's also because there is sometimes discrepancies between what is discussed in a finance track with finance ministries, and what is discussed with the foreign affairs, with the Sherpas, with the leaders. And so I think we need to close this gap. And so I think that we have some concrete ideas to engage more with the UN representations in New York. We probably also IMF and World Bank could perhaps engage more with the civil society and with the countries. Of course, the countries are already represented, but I'm talking about the foreign affairs, the foreign affairs ministries and the Sherpas and the leaders, etc., in order to explain what we do here in Washington, D.C. and in the different creditor committees.
It's a really important point that you ended on. I'm glad you brought that up. I was in Washington for 15 years before I recently moved up to New York to take on this role, and have seen that disconnect. I was in the U.S. government. I was at the State Department and USAID, and back in the day, and saw that there can be that disconnect, to your point, between the finance tracks and the foreign policy, if you will, tracks. And so I think on this issue in particular, your point about how that really does play out and the steps that you're taking, I'm curious if you think that, hopefully sound optimistic, that the steps that you're taking will kind of also increase the demand, right, for the restructuring. I know that has been an issue in the past, as far as countries actually coming to seek the actual assistance, given the length and the time and the effect it could have on there.
I am convinced that we need to listen to the critics. Some of them are valid. For example, it's true that we don't have a coordinated approach for middle-income countries. There is no consensus yet. China agreed to the common framework for debt treatment only, in a way, in the context of the COVID crisis and for low-income countries. But I think that we should continue to discuss about that. It will be done at the end by consensus. And we know that with China and some other countries, we need to respect, in a way, their own internal processes. We have created something totally new, working with China, with Turkey, with Saudi Arabia, etc., India, around the same table. We are talking about some sensitive issues, debt, etc. But I think it makes sense to have this pressure also coming from the UN system to be more coordinated. You talked about the standstill. We did it for Ethiopia, so we provided a debt standstill during the negotiation. It was a specific case because Ethiopia already defaulted. So in a way, a pure debt standstill, you need to negotiate, find the parameters, but at the end, we reprofile totally the debt, we restructure totally the debt. So I think what is important is to avoid late interest. We need to be very concrete. We want to avoid a country in a context of negotiation to have late interest growing and growing. Most of the time, at the end, they are cancelled on the official bilateral creditor side. But we need to clarify that from the start. You also mentioned the importance of providing also something for prevention, how to avoid liquidity to become a solvency issue. It's not easy to find the right tools, but we have good concrete examples. If you look at what has been done, for example, recently in Côte d'Ivoire with the World Bank guarantee for credit enhancement and to reduce the cost of financing. I think that you have at the IMF and the World Bank the three-pillar approach developed by management and staff. It's interesting because it's a comprehensive approach. You need to improve the domestic to increase the domestic resource mobilization. There is a large potential in tax, raising domestic tax. I think on average, close to 9% of GDP. Because it's the first step. The budget in many low-income countries, the budget is too small.
I'll actually be having a conversation here on Thursday, a little preview.
So it is the first step to improve domestic resource mobilization. And we are talking about domestic revenue, but also domestic resources, because we see that in some countries, it's not only a question of international market access. It's also sometimes a regional market, which is difficult but you have local banks which have difficulties to buy new sovereign bonds in a local currency because they don't have enough domestic saving, and also a way to move these sovereign bonds from the balance sheet of the banks to the balance sheet of the population with a specific saving account, saving fund, etc. So it's, I think, also part of the agenda. Yeah. And then we have an effort by IMF and World Bank to provide low-cost financing. Yes. There is a dimension which is not consensual, but we think we should make progress, is how to, on a voluntary basis, to ask from France, China, other countries, of bilateral donors to provide budget support and not only project financing. Yep. I think it's something very important. We have access to low-cost financing to a certain extent, and it could make sense for us to complement IMF and World Bank financing.
On that, I wanted to pick up on that exact point, which is, especially you mentioned regional and low-cost financing. How do you see the role of the regional MDBs, EBRD, for example? You've talked obviously a lot about the IMF and the World Bank, as particularly on the restructuring side. Do you see an important role for the regional MDBs and IFIs? Yeah.
What is very clear is that we need MDBs and public development banks to work as a system. So you have World Bank, of course, the other regional development banks, multilateral ones, and also the domestic development banks working together. But we see that they complement themselves. For example, EBRD, they don't provide budget support. It's clearly not the mandate, but they can improve SOEs. And I have seen in many debt restructuring cases that you have the classic sovereign debt issued by the state, but you have also public debt issued by state-owned enterprises. Sometimes usually not always, but many times with a sovereign guarantee provided by the state. And so it's also the role of Regional Development Bank, EBRD, African Development Bank, to work with SOEs and to improve their governance, the way they issue debt, also to clarify the financial links between the SOEs and the state. Also, for example, for an electricity company, to be sure that the electricity will be sold at the appropriate price, reflecting the cost. So you have many things which could work better in order to avoid an unsustainable debt, also coming from SOEs facing difficulties. It can also, it's not only for low-income countries, we have all for emerging countries and also in France to ensure every time that our SOEs are financially sound. I think that EBRD can also, for example, and over MDBs, they can also help with some specificities. For example, EBRD are used to have a treasury activity in local currency. So they act like a sort of commercial bank, having transactions with the central bank, etc. So they create a sort of local currency liquidity pool, and with this liquidity pool, they can on lend in local currency. And it's something which is very interesting and which can complement the work of, for example, the World Bank.
It's really important because, as we mentioned going back to the beginning of our conversation, especially right now, some of that currency and valuation is another risk on top. We're coming towards the end of our time together, unfortunately, but I did want to ask you one last question, if I may, which is, we know that we've seen that the sort of downstream impacts of debt, especially when we talk about that tight fiscal space and often the inability to then invest, whether it's in education or health, those impacts can be disproportionate, whether it's women that might be at a disadvantage. How is there a way in terms of these debt treatments to think more about that and to address and sort of mitigate some of those potential inequality impacts of debt?
Perhaps
So sort
I
of
am
macro to micro kind of question.
I have the
right?
feeling that your point is very valid, but it should be related to the discussion a country has with the IMF and World Bank. Because the debt restructuring itself, what we do is we follow the result of the debt sustainability analysis. Yeah. But your point about how to be sure that, for example, a fiscal consolidation, which is usually associated with the debt restructuring, it has to be discussed with IMF and World Bank. And I think it's fair for the country to explain that it has to be gradual. They need to protect and even to sometimes to increase, usually many times to increase social spending. So it means that to find saving, you need to look more at some fossil fuel subsidies, things like that, and to be combined with the support targeted to the most vulnerable population. So I have the feeling that your point should be dealt in the context of the IMF and the World Bank discussion. Of course, as official bilateral creditors, we need to support that, but we do it as IMF and World Bank shareholders, so at the board. When we do the debt restructuring, it's in a way something which is, it's not ODA, it's just to be sure that we put the country in a sustainable path, so that he can not only reimburse a lower amount of debt in net present value terms, and he can also have access to new debt. But we want to avoid us as official bilateral creditors to be involved in the domestic policies. Yeah. So I think it's a division of labor. But of course, we are supporting that through the IMF and World Bank boards. And African Development Bank, I mentioned something very important, infrastructure. The regional development banks have a very important role to play in terms of infrastructure. If you look, it's my conclusion, South Africa has put on the table what are the impediments for growth in Africa and in other regions. And they have taken a comprehensive view. Macro stability, institutions, infrastructure, and cost of capital. And I think it's interesting because they don't go directly to cost of capital, but they have this comprehensive view, and I think it gives a roadmap to improve the situation in many countries, including in France.
Well, thank you. It's been a real pleasure to speak with you today. Please continue to follow our work here, our series of events here in the studio at the Atlantic Council. Next up, my colleague Charles Litchfield will be speaking with Ukraine's finance minister. So join us here live at 1 o'clock. We'll see you there. Thank you. Have a great week.
Thank you very much.
Thank you.
I hope it was okay.